Tokenized equity holders hit record 759K, up 522% this year. Tokenized equity holder accounts have climbed to a record 759,000, a 92% jump in 30 days and 522% growth year to date, according to RWA.xyz data cited by Cointelegraph on July 30th, 2026. The figure counts wallets holding on-chain versions of company shares, and its pace has outrun almost every other real-world asset category this year. The number matters because it tracks people, not dollars. Total value locked in a sector can be inflated by a handful of large treasuries parking capital. A holder count rising 522% since January points to something different. More individual wallets are taking positions in tokenized stocks, and the base is broadening rather than concentrating. The count is outpacing the capital. Most real-world asset growth in 2026 has been measured in dollars. Tokenized U.S. Treasuries and private credit crossed $30 billion on-chain earlier this year, but that growth came largely from institutions moving cash management on-chain. Equity tokenization is different. A 92% increase in holder accounts inside a single month suggests retail-scale participation, where many wallets hold small positions rather than a few wallets holding large ones. That distinction shapes what the trend means. When holder counts rise faster than total value, the average position size is shrinking. New entrants are testing the waters with modest amounts. It is the shape of an adoption curve in its early, wide phase, not a late-stage concentration where a few whales dominate. Consumer platforms are supplying the demand. The surge lines up with a wave of consumer-facing platforms shipping tokenized stock products. Robinhood's on-chain push has been one of the clearest drivers, with the company's tokenized stock offering growing fivefold as its assets cross $70 million. When a mainstream brokerage puts tokenized equities in front of tens of millions of existing users, the holder count moves quickly. Traditional finance is building the plumbing underneath. A group of European banks recently formed the RL1 blockchain cooperative to standardize how tokenized assets settle across institutions, and BNY has laid out plans for 24/7 settlement of tokenized treasuries by 2027. The infrastructure and the retail demand are arriving at the same time, which is unusual. Most crypto cycles see one lead the other by years. The caveats behind the number A holder count is a useful signal, but it is not a complete picture. The metric counts wallet addresses, and one person can hold many wallets, which can inflate the figure relative to the number of real individuals participating. RWA.xyz's methodology captures on-chain addresses, so airdrops, promotional distributions, or incentive campaigns can push the number up without reflecting durable investment interest. There is also a regulatory overhang. Tokenized equities sit in a gray zone in many jurisdictions. Some products are structured as derivatives tracking a stock price rather than direct legal ownership of the underlying share, which changes the holder's rights in a dispute or a corporate action. The 759,000 figure treats these structures the same way, even though the legal protections behind them vary widely. A reader deciding whether to hold a tokenized stock should check whether the product grants real share ownership or merely price exposure. Liquidity is the third open question. A record holder count does not guarantee that any given tokenized stock can be sold quickly at a fair price. On-chain equity markets remain thin compared with the multi-trillion-dollar traditional exchanges they mirror, and spreads can widen sharply during volatility. That risk grows as more small holders enter because retail flows tend to cluster around the same handful of popular tickers. The signal for the next quarter. The near-term test is whether the holder count holds its slope once the current wave of product launches settles. A 522% year-to-date gain sets a high bar, and month-over-month growth of 92% is unlikely to repeat indefinitely. The more durable read is directional. On-chain equity ownership is moving from a niche experiment toward a measurable retail behavior, and the platforms feeding it are getting larger and more mainstream. Crypto sentiment is cautious in the meantime. The Fear and Greed Index sat at 36 in fear territory as of July 30, 2026, with Bitcoin at $64,224 and Ether at 1,916. that the tokenized equity holder count kept climbing through a fearful market says the trend is being driven by structural adoption rather than a broad risk-on rally.